Thank you for joining us today. This is Kaitlyn Allen with Global Affairs Associates, a boutique sustainability consulting firm in Houston, Texas. We're here today with one of our advisory board members, Michael Bloom, who is a sustainability consultant who helps clients create more resilient and sustainable projects, particularly municipal and infrastructure projects. He's an Envision sustainability professional, which is what we're going to talk about and we'll define in a moment. He's also a professional engineer in Texas and 7 other states. And he is the past president of the Houston chapter of the Environmental and Water Resources Institute of the American Society of Civil Engineers. Besides that, he is a brilliant business person, has given us so much guidance, and we're very grateful to have him today to talk about the Envision framework and how it can help basically verify the sustainability credentials of public projects. So thank you, Michael, for being here. Let's start for just a few definitions. So we're going to talk about 2 types of assets today, both physical assets. So in Michael's world, he's usually talking about real assets. And in our world, we're usually talking about monetary assets. So with that said, there's a study by Deloitte that's been going around, just came out in 2020, projecting that 50% of assets under management, that's the monetary assets under management by investors, will have some sort of ESG screening by 2025. And that's just based on the current growth curve, which is very fast. So this particular conversation today is part of the broader conversation about the value and the difficulty of measuring ESG credentials. So people love to say that there are no standards for ESG and no standards for sustainability, but actually the opposite is true. In fact, there are many, many different standards out there. But part of the problem is that those standards are voluntary and market driven. So there's actually quite a large market. That's a little bit less true for sustainable infrastructure. And Envision is one of those very useful, very well thought out frameworks that is a sustainability credentialing framework for infrastructure projects. So let's talk a little bit, Michael, could you give us a little bit about the history of Envision and what it is and how it came about?
Sure. So, I guess back in the 1990s, the architects, came up with the Leadership for Environment and Energy Design for Buildings, or LEED program. And so I like to describe the idea of Envision as sort of, architects are using LEED to, make buildings more sustainable and better. And then, engineers and planners will use Envision to make, public infrastructure projects not so much occupied buildings, because that would be directly competing with LEED, but really more about the horizontal infrastructure and public infrastructure projects that are kind of everything else that the planners and civil engineers would work on. And so I also like to joke that, the engineers and planners were jealous of the architects because LEED seemed to be pretty successful, and a lot of tenants and occupiers and building developers really embraced it. And so now, you look at some of the higher end office properties as sort of having to be LEED credentialed. Or LEED certified. But anyway, so the engineers and planners were jealous, and so we created Envision.
Wow, 2012. So it's not too old yet. It's only 8 years old. How is the adoption rate thus far? Are there a lot of Envision projects around?
Right. So what I wanted to show here on the screen is the the cumulative value of Envision-verified projects since the initial publication in 2012. And so
Wow.
these are, dollars in millions of dollars, and we're only looking at the first quarter of 2020.
Wow.
So we're really on track for a great uptake for the program, which is exciting.
That actually, that curve reminds me of the ESG assets under management curve. It's also one of those just exponentially growing curves, which is how they got to the 50% by 2025 projection.
Right. Okay.
And that actually, it makes sense, because Envision is a little bit unique as a sustainability credentialing framework because most infrastructure projects are funded by public agencies. So it's sitting at this intersection between public agencies and therefore taxpayers, the private construction and engineering companies, and investors as well. So when investors say they want proof that a project is really green, it sounds like Envision is a third-party certification that can provide that proof. Is that right?
Right, and so I just wanted to show really quickly also this document here. This shows the agencies that are currently moving forward and using the system. So again, it's a lot of cities and counties and some other public pseudo-public agencies. You'll have airports included and ports in there as well, but just a large number of cities and counties all throughout North America predominantly. And then in terms of the sort of the global reach, it's just starting to, and I'll go to this other map, these are the projects that have either been fully verified and complete. Saudi Arabia has one, and of course North America, it's so dense there that you can't see them all. And then the black color shows projects that are sort of in the pipeline that are registered but haven't yet finished the process yet.
Mm-hmm. That's amazing that it's grown so much in just a few years. Let me take it local for a moment and ask you, since we're in Houston, we're in Harris County, Texas. I noticed City of Houston on there. Can you tell us a little bit about how Envision is being utilized in our community?
Yeah, so the City of Houston is interested, and they're still kind of in the checking it out stage, I guess, if you would say. So the Resilient Houston plan that was developed under the 100 Resilient Cities program that the Rockefeller Foundation created, that plan mentions in the Envision framework in a couple of locations. And I know that there's at least one project that's rumored to be looking at it closely, one of the larger scale flood mitigation projects that is moving still in the pre-planning stages right now. But really in the Houston metropolitan area, the agency that's really embraced it and is running full speed ahead is Harris County Engineering Department, and also particularly Harris County Precinct 2 Commissioner Adrian Garcia. And so I know that there are two projects that are, one registered and moving forward, and then another one that's about to be registered, that are both in Precinct 2.
That's great. That's great that we have that going on locally, especially with all the major flooding issues. Of course, I'm sure everyone is familiar, even if you're not in Houston, familiar with that issue. Right. So that's good to hear. Let's talk a little bit about how Envision is either similar or different to global sustainability frameworks. And I'll just mention, I know that GRESB, which is probably one of the more widely used organizations for ESG data in the real estate sector, or I guess real assets more generally. GRESB does use Envision to evaluate projects, among a few others, more regional ones, of course. But I know that the United Nations Sustainable Development Goals align pretty well with Envision. Could you tell us a little bit more about that?
Yeah, so there was a researcher at the Zofnass program at Harvard, Christina Contreras, and she really did a thorough comparison between the sustainability goals that the UN has put forth. Again, there are 17 broader umbrella goals, and then underneath that, there's 169 specific targets. So it's a pretty comprehensive and fairly detailed, document to look through. And then similarly, so you have 169 targets for the UN. Under the Envision program, there's 59 core credits. And so, Christina went through and did a straight up comparison of everything and found that, really 67 of the 169 targets for the Sustainability Development Goals that the UN has are either indirectly or directly applicable or tied to the Envision credit system. So 34 are like really, really, really obvious, straight up direct comparisons. You can, if you get Envision credit for that, you're going to meet the target for UN. And then 33 is sort of indirectly related. So it's kind of a little bit of a gray area there. But it was pretty impressive to see just how well they did align.
Mm-hmm. Yeah, no, I think that's very interesting because people, particularly in impact investing communities, so that being more private markets, but using the SDGs as a way to basically direct impact towards something that's already been sort of vetted on the global scale, that's becoming pretty popular. So it's interesting to know that Envision lines up so directly in many cases with the SDGs. What about the municipal bonds issue specifically, Michael? Could you tell us a little bit about how this all relates to the municipal bond topic?
Right. So, in general, when municipalities are needing to invest larger dollar amounts in bigger projects, right, they typically will issue debt in the form of municipal bonds, and then they use the bond proceeds to build whatever they need to build, and then based on general revenue, they'll pay back the investors. And then there's this trend that you've certainly been probably more familiar with than me, about sort of green bonds or branding the bond offering as a green or a more sustainable offering. And so for folks that are sitting on a big pile of money that want to invest in sort of in a green type of investment where they may get the same amount of return or maybe even a higher return, but they want to be sure that investment, the proceeds of their investment are going to a green project, the Envision framework is a cool way of sort of having a third party bless and validate and verify that the bond proceeds are going to something green, as opposed to what might be cynically called greenwashing, where I could offer a bond for sale and call it green, and really it's not that different than any other water or wastewater project, for example.
Yeah, absolutely, absolutely. Well, and that makes me think too, as a taxpayer wanting to know, particularly as a Houstonian taxpayer, right, in Harris County, wanting to know that those tax dollars are being spent on flood mitigation that works. And more generally, any sort of new assets or new infrastructure, we have a very, very real and personal, personal impact for all of our property values, even flooding within our homes and that sort of thing. It seems to me that as a taxpayer, I would want to know too, or I do want to know that the money's going to infrastructure that actually is, kind of understands the whole picture, and isn't this sort of excessive, pave and go type development that got us into this problem in the first place, at least in the Houston area.
Yeah, I mean, just to that point, I wanted to highlight this, the idea of sustainability. There's a bunch of different ways of thinking about it, but one very powerful way of thinking about it is that if you're investing public dollars, you want to try to solve more than one problem at a time. and you want to provide as many benefits as you can. And so, the old way of thinking is to invest a lot of money to solve one particular problem or achieve one goal. Whereas the sustainability approach would be to solve all of the different elements, solve more than one problem and provide more than one benefit. So it's social and environmental and economic benefits. So that's just a way to leverage the public dollars and have a higher return for the public investment.
No, that makes a lot of sense to me, and probably to at least other Houstonians as well. Anyhow, just a little bit more about the actual certification. Could you tell us a little bit about, who the players are, right? So who would actually get credentialed as an Envision sustainability professional like yourself? I know you're an engineer. Does anyone else get that certification? Who gets projects verified? Who are sort of the players around the Envision framework?
Sure. So, there's two parts to it, right? And you mentioned it. There's the professional credential, the Envision sustainability professional process, and that would be, certainly employees of public agencies that are making decisions about the investments for public infrastructure. There's also, professional service firms and contractors that are, involved in that, in the delivery, the design and delivery of those projects. So those would all be potential, great people to become Envision sustainability professionals. And so that's on the people side. And then on the project side, really the project sponsor or owner would be the one to try to identify the type of project and the scale of the project that they would want to have verified. And a lot of that sometimes depends on just the scale, because it's fairly costly to get a project verified. And so the economy of scale comes into play, and you'd want to try to spend those additional dollars not only in terms of just the cost of going through the verification, but also the potential added costs for capital investment, the upfront investment, to create this an outcome that solves multiple problems. You're going to spend a little bit more money. So maybe if your overall investment goes up by 5 or 10% initially, you're solving multiple problems. You're getting a bigger return on the back end. And so, the economy of scale, it's better to do bigger projects typically for that type of process to get verified.
So bridges, highways, that kind of thing?
Right. I mean, I would say the examples here, in this region would be, larger scale water, wastewater facilities, large scale flood damage reduction facilities, airports, or major expansions to airports. I think some of the agencies are willing to maybe try it on a smaller project, even though the marginal cost would be bigger on a small project. But just to get your feet wet, you could try it on a small one. But right now it's being used for roadway corridor improvement, and then also it's going to be used for a wetlands mitigation bank.
Oh, that's great. And that's local, the wetlands mitigation bank?
Yeah, those two are both in that Harris County Precinct 2. Commissioner Adrian Garcia's kind of the center and center and sort of east and southeast part of Harris County.
Very cool. I know you mentioned costs, a little bit of a slightly higher upfront cost for this. Is that a real barrier to adoption? Are there other barriers to adoption here? I mean, I see the curve going up really quickly, so I assume the barriers aren't that high. But what would those be if they are there?
Yeah, I mean, I think a big barrier is to what extent does the project sponsor and owner and the elected officials surrounding that, to what extent do they buy the premise? Do they agree with the premise that for a slightly higher investment up front and for slightly higher, design and planning costs, we can solve more problems and receive more benefits, right? And I think, especially in a revenue-constrained environment, or where you have an elected body or an electorate, I should say, where they may have, humans tend to have short memories, right? And so whatever the crisis is of the day is the most important thing to spend money on, and that tends to lead to investing in single purpose projects. So you've mentioned flooding a few times in our conversation. So it would be fairly easy for most Houstonians and potentially their elected officials to think that even if we invested $50 million in a project that only solved a flooding issue, that would be completely worth it, even though we could have also, for a slightly slightly higher amount of money, solved maybe a mobility issue or a health and safety issue or other issues. Sometimes that's just hard to see, and it's hard to sort of maybe believe in, right? So a lot of it has to do with the belief in multiple benefits and being that total return on investment being worthwhile. The other thing I would say too is that it just makes the delivery of the project longer. So if you're worried about timing, rather than make the planning and design and delivery of the project more complicated, which this would definitely do, because you're talking to multiple stakeholders, you're trying to solve multiple problems, there's multiple trade-offs, it becomes much more of a complex delivery of a project. So if you've got a deadline, a single purpose project is faster.
Yeah, but that's it goes back to the whole discussion of what is sustainable, right? Because if you take that extra time, in theory, to evaluate those multiple impacts and potentially solve multiple problems at once, versus we just need to get this thing passed and done, and we're not thinking about the future, and the other couple of problems that we could actually solve at the same time. If you're not considering all those more holistically, that by definition is not a sustainable investment, right? If you haven't considered the other implications in the future. So, but given those barriers, though, what would you say is the business case for it? I mean, it does seem like that total return on investment from a taxpayer standpoint is very appealing.
Right. I mean, I think so. Some of the business case for the public agencies, right, is that you can really demonstrate best use of public money. You're going to, because of the delivery process, you're sort of including many more people around the table in the decision making process. So there's a lot more sort of consensus building and sort of buy-in. And then you have this higher, economic, social, and environmental returns. And then, of course, the other benefit there is that you'll have a greater, access to the sort of ESG investment dollars, right? The folks that are investing in that kind of investment. So that would be you'd be able to attract a lot more of that capital, and maybe even have, lower interest rate or just better access to capital. And then as far as the design professionals, that are involved in the delivery of the project, I mean, they're all interested in continuing, obviously, their backlog of work. They want to get assignments and cool projects to work on. So having them become credentialed is a good business decision for them, especially, if they've got a public agency, with a higher spending amount per year, let's say, in a market. It's good for them because then they can sort of differentiate themselves and kind of win more of that work and get more of the market share. And then lastly, the construction firms, right, that are going to be actually building these things. A big chunk of the 59 core credits of Envision relate to construction activities. And so there is a need for the contracting community and the whole sort of supply chain of delivering a project. Once you're in a building mode, there's a lot of opportunities there for folks to differentiate themselves and sort of be more qualified to get that kind of work.
Yeah, well, and I would just add to that too, on the investment side, which is where we're, so focused on understanding these trends and linking these trends. On the investment side, there's this constant discussion about how do we measure ESG? What does it mean to be a sustainable investment? What does it mean to be an ESG investment? And I think for this particular type of project, and particularly translating into municipal bonds, green bonds, and sort of the bond markets in general, this to me sounds like a pretty comprehensive and solid way to assess and verify that. And like you said, kind of avoid the greenwashing piece. And as if Deloitte is right, and the curve gets us to 50% of monetary assets under management having some sort of ESG criteria in the next 5 years, I could just see this continuing to explode the way you were showing as well, that exponential growth in this.
So, I mean, the question I would have for the folks that are listening to this conversation, or your team, and this is more of a rhetorical question, but the question I would have is the emergence of the ESG reporting and ESG considerations in the investment capital availability side, is that going to get to a point where essentially capital for a non-ESG project would dry up or become too costly? I mean, because that would be a huge change, right? Like if I'm a municipal bond issuer and I literally cannot sell my bonds unless they are green, that's a huge deal.
It's a massive deal. I think in a way that's sort of a crystal ball question at this point. So like you said, being rhetorical, we would love to hear from listeners. Anyone who's seen this, please write us, email us. You can get in touch at globalaffairs.associates.com, or connect with us on LinkedIn as well. We're pretty active in that space. So we would love to hear what you think. Without giving too much away, I do think today, and I reserve the right to change my mind, but today, May 28th, 2020, I do think not today, to answer your question, I don't think that's true today, but I do think there's a pretty solid chance that will be the case in the next, let's say, 5 to 10 years. I could be wrong, but
I'm writing that down.
You write that down.
I'm writing that down, and we'll
you're gonna call me in 5 to 10
back.
years.
Yeah, 10 years from now, we'll check in.
Yeah, we'll see. But I do think that it's just growing so fast, and the movement you see from different different countries and regulatory regimes around this is pretty strong. Obviously, Europe is always held up as the example, but they're not the only ones with a green taxonomy in development, right? And so I think it's growing very, very quickly. Yeah. So anyways, what do you all think? Please get in touch with us again. I'll just thank Michael so much for taking the time to share more about Envision with us. You can get in touch with Michael as well. Also on LinkedIn, just find us and let us know what you think. And if you have any additional topics you'd like to hear about, just let us know. Write us and let us know. We'll be happy to do more of these.
Kaitlyn, it was great talking with you. Have a great rest of your week.
Thanks. You too. Thank you, Michael, for your time.
Okay,
bye,
bye-bye.
Everyone.